Hey there, welcome back to the channel. Today we're diving into one of the most debated economic chess moves of the last decade, Trump's tariffs. But instead of just rehashing headlines, we're going to break down how those tariffs actually impacted the stock market. And more importantly, where the money opportunities were and still might be for investors who know how to spot patterns. So whether you're a seasoned trader or just someone curious about the link between politics and profits, stick around. Because understanding this can sharpen your investing game for years to come. Let's start with the basics. A tariff is essentially a tax placed on imported goods. When the Trump administration imposed tariffs, the main targets were China, the European Union, Canada, and Mexico. The idea was to make foreign goods more expensive, forcing American companies and consumers to buy American instead. Sounds simple, right? Protect American jobs, punish unfair trade. At least that was the pitch. But when you start taxing imports, it triggers a ripple effect through the global economy. The stock market is like a living organism. It doesn't wait for policy results. It reacts to sentiment. When Trump announced the first wave of tariffs back in 2018, the markets got spooked. Stocks dipped. Why? Because uncertainty is like kryptonite for investors. But here's the plot twist. After the initial panic, certain sectors boomed. Companies like US Steel and other American manufacturers saw short-term price spikes, while multinational tech companies like Apple, who rely heavily on Chinese supply chains, took a hit. So if you were quick, you could have shorted Apple during the initial announcements and gone long on domestic manufacturers. This is the first money-making lesson. Trade the reaction, not the news. Tariffs didn't just affect the headlines. They altered the earnings reports of thousands of companies. Some companies passed the cost of tariffs onto consumers through higher prices, while others absorbed the cost, lowering profit margins. If you were paying attention, you'd notice that companies with flexible supply chains, like Nike, which pivoted production to Vietnam, managed to dodge the worst effects. Meanwhile, smaller companies with fewer global options got squeezed hard. This created a new kind of filter for stock picking. Look for companies with adaptable logistics, international reach, and pricing power. In other words, companies that control their own fate. And here's something most beginners miss. Tariffs don't just affect stocks, they also hit currencies and commodities. For example, during the trade war, the Chinese yuan weakened against the US dollar, a strategy China likely used to make its exports cheaper despite the tariffs. If you were a sharp forex trader, you could have profited by betting against the yuan during those windows. And don't forget commodities. Tariffs on steel and aluminum made these materials more expensive in the US, boosting prices in the futures market. At the same time, China slapped retaliatory tariffs on American soybeans, sending US agricultural prices into a tailspin. Smart money didn't panic, it adapted. Traders who shifted into the right commodities at the right time made serious profits. Even though the Trump tariffs aren't making daily headlines anymore, the market lessons haven't expired. In fact, we're in a world where trade tensions, sanctions, and protectionist policies are becoming the norm rather than the exception. If you understand the cause and effect logic of tariffs, you can spot these market shifts early. For example, if a new administration or country hints at imposing tariffs, you can expect initial market volatility. Prices swing as traders adjust. Sector rotation. Domestic producers usually gain. Global importers lose. Currency adjustments. Weakening or strengthening depending on who gets the upper hand. Commodity shocks. Materials affected by new taxes either surge or collapse. So next time you hear a politician mention tariffs, don't just roll your eyes, lean in. There's money on the table for anyone who can connect the dots before the crowd does. To wrap this up, Trump's tariffs were more than just political theater. They were a masterclass in economic cause and effect. From stocks to currencies to commodities, every tariff announcement moved the money needle. The next time you see a global trade dispute brewing, remember, the winners aren't the ones who panic, they're the ones who prepare. If you found this breakdown helpful, hit that like button, subscribe, and let me know in the comments. What do you think the next big market-moving policy will be? I'll see you in the next one.